Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And the market took a little bit of a dump. We're going to take a look at A, if this is going to continue and what that would look like, and which stocks you should be looking out for. Because remember, when people are freaking out because it's going down, that is the best time to profit for the more calm people who are not over levered or something like that. So, one, real quick, why did this happen? I'm not saying I agree with these four things. These are just the four things everyone keeps talking about. Bitcoin crashing, I don't think that had a large impact in my opinion, but everyone's going crazy about it. It did have a hefty crash. You see it?
Yeah,
It was a
I mean,
lot.
it's a risk off trade. People are nervous. That's what that means to me.
Yeah, yeah. Metals, there's like 3 separate days where there was a 15% gain or loss in silver, like this week, which is insane. AI spending is even more than we previously thought. Google is a big one for this. We'll talk about that when I show the chart. And weak labor market, which in my opinion is like 90% of the reason because it correlates perfectly with why. I'll show the labor market here. So basically, the Labor Department on Tuesday said vacancies fell to 6.5 million in December, which shows, number of people quit their jobs is basically unchanged. But let me get down to it right here. The economy is in a puzzling place. Growth is strong. Honestly, everyone's earnings is doing wonderful. Like if you looked at Meta's earnings or Google's earnings, the GDP is they're killing it. But the job market's very sluggish. Employers have added just 28,000 jobs a month since March. Just to be clear, in the 2021 through 2023 hiring boom, it was 400,000 jobs a month. Okay?
That's not a fair comparison, though.
I
They're coming
agree.
out of a pandemic. I need to know what it was in 2018,
Yeah, well, hey, I don't know. When has the news ever been realistic?
Fair.
It's like on
Yeah.
either side. So
Yeah. Agreed.
basically, it's slowing quite a bit. Unemployment's rising really slowly, but still fairly stale. So it's not usually what you'd expect when you look at all these companies that are releasing billions and billions of dollars of profit. It's just it's a little bit uncommon. Okay, here's the cues. This is like a 2 or 3 year look. This is going back to the beginning of 2020. Okay, 3 years. Wow. 2023. All right. Now, this blue line is the 200 moving average. This gray line is the 100 moving average. Okay. So usually, look at this. When we hit these 200 moving averages, there's these bumps, bump, bump, complete
Yeah.
collapse, and then up top. Now we're going to zoom in. It did bounce around this this zone of what I call the decision zone in between the 100 and 200 multiple times, and it stayed
hmm
above it, right? Until it collapsed here. Now, if we zoom in where we are in that zone right now,
Ah, okay.
okay? So, and you can see we did hit it 3 times, which is a lot to be clear in a span of 3 months. Usually, if I go back real quick, it's kind of a, you know, couple times within a month, and then you're up, and then down, down,
Yeah.
down, boom, boom. Not three, well, not once a month. It's a little bit uncommon. Okay, we did come up on high volume, but let's take a look at the stocks themselves because they tell a little bit, in my opinion, of a shittier story. So the top 10 holdings here for the Qs. This is almost half the market. So this is how half the market is doing. Okay. Now let's start with the big boys that are doing well. I technically put this in the well category because if you look over here, it is like 20 cents above the 100 moving average. So I'm
Okay.
going above the 100 as in good, in between the zone, we don't know, and then below very, very bad. Because usually once it goes below the 200, it usually drops quite quickly, as I will show you. So this is about 8.9%, and it is just above, like barely. It's right
Yeah.
in that zone. Okay?
Yeah. I would write home to mom about that one.
I agree. I would write home to mom about this one, though. Apple, 7.34%. It rebounded off this 100 very nicely. It's heading back up to almost all-time highs. It's doing great.
Hmm.
It's doing pretty solid as of now, right? Now remember, if the whole market starts sinking, it doesn't matter what's doing great because they all go down together. Google, same thing. If you guys saw Google's earnings, they basically put up unreal numbers like Meta, where it's like, how do you have 20% growth, 48% growth in your server, whatever it was, at insane numbers. And the reason why it didn't shoot up from that was the amount of money that they're spending for AI. I believe was 185 billion next year or something.
Yeah, somewhere between 175 and 185 billion.
Yeah.
Like basically said we're betting the entire year of
Yep.
cash flow on this one like
Yes.
option, if you will. It's
And
insane.
it is,
Well,
to be clear, if anyone's going to succeed in that area, it's going to be Google or Anthropic. So not OpenAI. So anyways, killing it. Okay, and that's another 7.25%. Walmart, unexpectedly, 3.8% of the Qs, absolutely destroying. Congrats to them. I don't have any of this.
The same. I don't own Walmart.
Yeah, me neither. Good job, though. Now, this is in the zone. This is between the 100 and 200. Okay, this is where decisions are made. Tesla bounced off this 200 right here. Oh, let me get my arrow. There we go. Bounced off this 200 right here. We're still in this zone. You really don't know what's going to happen, but the 100 is above the 200, which is generally a good sign-ish.
Mm-hmm.
Slightly better than a coin flip. All right. Broadcom, same thing. This is another 3% of the entire Qs. Chilling in between this zone, though, if you look, we are actually trending downward.
Yeah.
We have been
I
making...
mean, they reacted positively to the Google news, though, because now they're seen as a beneficiary of that.
Yeah. They're going to be a huge beneficiary because 180 billion has to go somewhere. A large portion of it's going to go to Broadcom. The problem is they are making lower highs, essentially. So we'll have to see in the next week how this shakes out. Meta, this one's surprising because their earnings were sexy. Like, look at this. Vinny did a wonderful video on this. 650-ish, 660-ish to about 740. Killed it. And then, unfortunately, just timing, they lost that entire bump. They're back down to below where they were for earnings. I actually bought 10 more shares of this.
Nice, dude. That's impressive. And this is a little bit of a side here, but everyone's worried about this massive AI spending boom. Meta and Google, two of which are some of the biggest gorillas in the room, but they're two companies that have immediate payback on this because they're advertising companies.
Yep.
And AI targeting ads is one of the earlier products that will actually be fruitful for these companies. So it's so silly to punish Meta and Google, in my stupid guy opinion, that owns both of them. So bias notch 10, but it's just crazy to me that they're the ones that are being singled out or punished, most significantly here for investing significantly in AI infrastructure.
Yeah, no, you couldn't have said it better. There's people are saying this is .com bubble 2.0. No, because those companies weren't making $80 billion, whatever it is. It's not the same, right? Without AI, these companies are still the top 10 weight companies in terms of profit. It's not close. Yeah. On top of that, like you said, there are many sectors of AI that are going to be cash heavy. OpenAI is a wonderful example of this. They're going to be burning money for a long time, but these are two we'll see immediate returns. Mm-hmm. And they're positioning themselves, both of them, willing to spend, frankly, a shit ton of money to do it. And like Meta has said, like Zach Zuckerberg has said during their earnings calls, is like, look, even if this fails, we're at capacity for all of our data centers, so we could finally do cloud. It's that's your backup plan, is you could finally establish that. Oh no.
Yeah. They could pivot into another very profitable market sector.
Yeah. I bought 10 more shares at 660. I bought about 15 shares total once it went below this 100 moving average. I'm looking to buy more. I'm just scaling in here because I'm hope I'm not getting greedy here. Microsoft, Tank City. Okay. This is bad. This is what happens when you have a rejection of a 200 moving average, and then it comes out that you are way too into OpenAI and have really, really banked on that opportunity.
And I mean, they're also spending tens of billions of dollars in CapEx too.
Yeah. So I'm sure if we do have as weird as it is, the ones that have fallen the most, if there is a crash where people get emotional, these ones actually fall more comparatively. So if there is a crash, I'm not saying there's going to be, if there is a crash, this could easily go down to the 200s, no problem, of which I would pick some up.
Nice,
That
nice.
sounds good to me.
Yeah.
Because,
I have a tiny bit.
dude, like 500 to, they lost 20% of the company in 10 days. Like, that's crazy.
Yeah.
Amazon, another 5% of the Qs, down well below after the 200. Granted, this just happened, so we don't really know how it's going to respond. But as you can see, not great. All right, so just going back here, 5%, 6%. So 15% of the entire Qs are below the 200 moving average, with another 6.5% that we don't know what's about to happen.
All right, fair enough. I mean, there's been a lot of this talk about market rotation sort of thing. It's something that anticipated to a degree, right? Because these stocks have been absolutely crushing it for years now. Remember that data point on how like 90% of performance of the SPY has been like these top 10 companies for several years, right?
Yeah, yeah.
So the question is it now someone else's time to shine? I don't know. To a degree, I understand that rotation mindset, but these companies have done fantastically because they are winners, and this is a winner take most sort of economic picture setting up here with AI. Because let's face it, like a lot of these companies don't have $180 billion to invest next year, but Google will have $180 billion to invest. That's like 1 year of earnings for them.
Yeah, it's insane.
Yeah,
it's impressive.
So, I don't know. I think this may be shorter term than like a full blown cycle market rotation, but there may be some good opportunities here.
Now, let's just say, for the sake of argument here, let's say that there is a crash in the stock market, not a crash. Let's say that the stock market drops another 10%. So the Qs are at about, like 600 right now. Let's say that they drop to 520. What 3 stocks are you trying to pick up?
I would love to own more Google. I'd love to own more Meta. And I'd love to own NVIDIA. I don't own any of that at this point, but I would love to own it if I got the opportunity to do so at what I considered a reasonable price.
Okay.
I don't know what the reasonable price is right now. That would require a lot more effort. But I'm just saying, like, those are companies that they're absolutely crushing it and long-term winners, internal compounders, and they have a terrific outlay for their products as far as like reinvesting in the AI in order to better target ads and getting return on that immediately. And NVIDIA is of course market leading product as far as their chips go, which is powering the entirety of this, and no one else is even coming close to them yet. So they're all companies that are absolutely like thoroughbred stud winners that I'd have some of and I'd like to own more of if the right price should happen.
So mine is going to be Meta, Google, and then IWM. Because
Okay.
if you look at IWM in terms of, so IWM is just the Russell 2000, it's the ETF.
Yeah.
If you look at how much they've dropped compared to the market, they're actually doing great. They have shown some resilience, which, anytime you have sector strength, it usually means you're going to have a good couple of years ahead. And then small caveat here, if there is a decent market tumble, sometimes stocks that have absolutely nothing to do with it drop. There's no change in tensions between China in any way whatsoever, but BABA drops to 120, I'm not going to grab more.
All right. I mean, they're like the number 4th cloud company in the world right now.
Yeah.
Don't forget that. It's still relatively small compared to the, Amazon's. I think it's like Amazon's like 30% of market share. They're like 4 or 5%, somewhere like that, just to give you an idea of the scale. But they are the largest non-US based cloud provider, which is awesome.
And
as
they
far
have
as
the
IWM
backing of the CCP. Yeah. Not saying I agree with that, but they're willing to spend money.
Yeah. But as far as like the small cap rotation, that's like 20% of my overall like assets still at this point. So
I don't have enough.
I don't know if I need more of that right now.
Okay. I actually bought some more this week.
All right.
I only have I'm at like 4%. I'm not where you're at.
Yeah.
All right, guys. Let us know what you think.
Get to the next one.